The key is, don't be scared. In the future, there's going to be more people, and they're going to want to live somewhere. Yep. And we've got our business plan for Australia is immigration. So here they come, and they're coming with skills and money, and we've already got a rental shortage. So you're not going to have trouble renting it out.
You're listening to Property Investor Tales, stories from the front yard. Here's your host, Tabitha Bright.
Welcome to Property Investor Tales, stories from the front yard, where I get to speak to property investors from around Australia about their investing journey. My name's Tabitha Bright, and I'm the head of coaching here at Positive Real Estate, where we help people build wealth through property. With over 8,000 clients across Australia and New Zealand, there are some incredible stories to tell, which hopefully make your investing journey that little bit easier and will inspire you along the way. So my guest today is Geoff McGuinness, and we cover how to reform your procrastination, dealing with the fear of debt, which of course all falls into part and parcel of the fear of procrastination, and the power of coaching to get a fantastic result. So enjoy this conversation with Geoff. Hey everyone, welcome to today's podcast. I'm very lucky to have Geoff McGuinness with me here today. He's one of our clients here at Positive Real Estate, and he's going to share some of his wisdom. He's had some lessons around procrastination that I'm sure all of us can relate to, and he's going to share some of his stories with me today. So welcome to the podcast today, Geoff.
Thanks, Tab. How are you, mate?
I'm good. Now, you started in the mentoring program quite a number of years ago with one of our original coaches, David, his name was. We used to call him D. Neza as a bit of a nickname for him, the Nebuchadnezzar. And you were telling me a funny story about when you first caught up with David. He did the interview to talk to you about the mentoring program, and what happened?
Yeah, basically we met in Broadbeach over a cup of coffee, and he explained everything to me after I'd been to one of the seminars there, one of the information nights, and I told him where I was at, and he promptly said, "No, you're not ready." and I'm like, what the hell? I'm trying to pay you money here and learn and invest. And he was very upfront and very straight with me, and much to the credit of him and the business, I think, because, there's a lot of businesses that will just take your money. Yep. And he was right. I wasn't ready. And I've been a member now for 7 or 8 years, and it's only really the last probably 2 years I've really got going.
Yeah, amazing.
I knew I was with the right team from that point.
So we sent you off to sort some stuff out, obviously, and then you came back again and progressed the membership from there. Is that what happened?
Yeah, that's correct. I was I'm in mining. I work in mining, and the jobs were a bit iffy at the time. There was retrenchments going on, and he was pushing me to buy in Sydney, which I didn't do, which I very much regret. Penrith deal. If I had done that and a few others, I'd probably be no longer in mining. But anyway.
Look, I guess sometimes we have to sort stuff out in our own heads, don't we? And I mean, I think
I had a big fear of debt. Obviously, it was higher than what it is now, the interest rates and so forth. But yeah, I'd always had the mentality of smash debt out, knock it down, own it. Yeah. And you guys are the other way. Use it, leverage it, use it to your advantage. Use other people's money and basically effectively rent it for a higher return.
Yeah. Absolutely.
So, I've gone full circle on that. Probably sitting at about 1.5 million now. But anyway.
And your rents and everything would cover that nicely, I imagine.
Yeah. I've got a place in Palm Beach. Originally, They told me it was rent for around 500. I got 6 for it without
That's
any.
awesome.
We bought a house in Blackwater where we work and live. We were renting that out. That was covering itself, but now we've moved into that. So that's our principal.
Yep.
And we've got a off the plan for Fitzroy North, near the racetrack there, that one.
Yep.
Can't even think of the name of it now, but anyway, it escapes me. And we've just bought a off the plan in our super fund at 1 Earl Lane. So yeah, we're quite excited about that one. That one looks awesome.
Yeah, that's a Brisbane one. It's very much a like absolute blue chip.
That's what I liked about it. And I didn't even realise half of that when we were looking at it originally. I'm pretty naughty. I don't read everything. I just flick through things, but you know, I was confident in who I was buying from and what the product was. But then I sort of put the expression of interest in. I was second. I was amazed by that because I'm out in the bush here. So I got the one I wanted, and
awesome.
yeah, we've had some problems with contract naming and that, but we're on top of that now, so it's all good. We're unconditional. So yeah.
Oh, congratulations!
Yeah, a bit of a, it's not always easy, but yeah, it's worth the hard slog on, is what I'd say.
Yeah, because it is essentially building a business on the side, right? And so it comes with its areas where you have to grow as, as a person. There's education you've got to do. There's stuff you've got to understand. There's levels of discomfort and uncertainty that you have to overcome. And when you and I were first talking, you were saying that primarily you joined initially for the education.
Yeah, that's correct.
Yeah, so take me through that.
I make a lot of time to watch all the podcasts, yours and especially Sammy's. He's my favourite.
Isn't he wonderful?
Try and catch up with Jace every morning and on Fridays, of course. If I miss them, I usually go back and make sure I watch them all.
That's great.
Because even though quite often it's saying the same thing over and over again, it might take 6 or 7 times to think into this thick skull of mine. So
we're all the same.
But yeah, education's definitely the key. And I was a procrastinator. I'll admit it. I should have done it all years and years ago. But anyway, when I was 21, I told everyone I'd be retired by 30, and now I'm 48, and I'm doing it all in the last 2 years.
We'll get you there. But it's interesting because you brought up 2 really important points. There's the education side of it, and there's the taking action side. And so if you only do education and you don't take action without stating the absolute bleeding obvious, you can be the most learned person in the world, but your situation doesn't change, right?
Yeah,
and
that's correct.
And I think what you've done really well in the last couple of years is you've got to that point, and we all take different times to get to that point where you have been able to take action. You've bought and sold property over the years. You've been successful in your investing, but there were also some lessons there, right? Because this whole thing.
I was effectively a trader, as Jace would call it. I was in and out. Tin pot turkey. What does he call them? But anyway, I had some good success, but it would have been a lot better if I'd held them.
100%.
A couple on the Gold Coast, three properties, and a couple I didn't go ahead with. But anyway,
tell me a little bit about that, because let's start with Hervey Bay, and then we'll talk about Burleigh. Yeah. Yep,
sure. Hervey Bay, we bought a block of land. It was in 2007. Should have had the warning bells on, but anyway. We just went for a drive up the coast, and we came into Burham Heads, and we found this little estate on the beach, and we thought, this is pretty good. Yeah. And we secured a block right across the road from the beach, effectively, for $239.
Wow.
And I thought, hey, we could live here one day. This would be cool. And the river just down the road and so forth.
Yeah.
After that global financial crisis, everything, hit the wall, so to speak.
Yeah.
And it went as low as 88 grand, if I remember correctly.
Wow.
Should have bought 5 more, But anyway, the house next door sold for 288, and that was a fully built 5-bedroom, 2-story house. So
Right.
I could have
So
got
you
that
felt-
one, but I didn't.
Yep.
My thinking was to pay the debt down
Mm.
and then build, and always have a small debt. I was always scared of debt. So where did I go wrong there? We looked at building a very nice home, 2 stories for 275. We waited 8 years, paid the debt down, and we spent 260, and we got a 1-story.
Right.
So that was the opportunity cost of waiting. But anyway, we made a profit and sold that, and now we've moved on, obviously, into where we are.
And got a couple more. So I just want to pause here for 2 seconds, because there's some lessons here, and I just like to highlight so people pick up the detail of what you're saying. So you bought some land. It was 288,000. When you buy land and you don't have a property on it, it can impact your servicing because there's no rental income associated with the debt.
Absolutely.
So essentially, this can hold you back from an investing perspective, because the bank says, well, you've got to service this debt and there's no income. So it's often a challenge for people when they hold land without the corresponding house on it. So just something to be aware of. Secondly, you bought it at 288. The GFC hit.
Yeah, 239, but
the property, 2009. The property plummeted in value, probably in a relatively short time, down to around 88K.
Yeah.
And I know a lot of people, because we were coaching people. I don't think you were part of Positive Real Estate back then, were you?
Not that early, I don't think. No.
So we coached a lot of people through the GFC. And I remember looking at even my house prices here in Melbourne, and they dropped a good 200K before bouncing back up again.
Yeah.
There is this fear around these big events that people have that stop them from investing. And, at the moment, it might be that interest rate rises are on the horizon. Yeah. And people go, whoa. And we'll talk about this in a second, your experience talking to someone about it, because people go, oh, I'm either going to sell, or I'm going to hold and wait and not take action, because there's this fear of something bad happening. Now, with the global financial crisis, absolutely not taking away from that. It caused some real chaos. But then we saw properties rebound after that. So how fast after that did Hervey Bay climb back up? Because I know it took about 18 months for my Melbourne property to bounce back up. But Hervey, because it's regional, might have been a bit longer.
It was a lot longer.
Yep.
It was very, very stagnant for a long time. There was small increases that had dropped back again. Right. It wasn't until 2020 I started to notice things were moving, starting to sell. And I thought, hey, we better get onto this and build, because this could be our chance to get out. And it was.
Gotcha.
I think Winston Churchill said it best: never fail to take advantage of a disaster, or something along those lines.
And that was COVID, I take it.
Yeah. So we built, and we lost the story because we waited so long. We paid our debt down,
inflation.
we had a good deposit, but we lost the story.
Yeah.
Still a very nice house, but it was full of disasters along the way. So we just didn't feel good about keeping it. So we sold it.
So you decided to sell it. Yeah.
Yeah. And we've used that to springboard into 3 other opportunities. So yeah.
Oh, that's fantastic. So congratulations on taking action. And sometimes we do buy a property that, for whatever reason, at the time seemed like a good idea. And as much as we embrace the buy well, never sell, sometimes with the information we have in the moment, our goals, our expectations, markets change. And so we do need to rationalize our portfolio, which is what you did. You took action, you sold at a time that there was advantage to selling. And now you've been able to go out and buy another 3 properties because of those decisions, and you made your money back plus some, which is a fantastic result.
And even just the one in Blackwater, we're not recommending buying in Blackwater. It's a mining town, but I live here, I work here, I get paid to to rent or buy,
Right.
so it makes sense for me.
for you.
I had to twist Megan's arm a little bit to understand it, but she's on board now. But she says, as soon as it doubles, you're out. But yeah, we only borrowed 108 because you've got to have a 30% deposit out here. We bought for 155, borrowed 108. I've already got it down to 52.
Amazing.
And that was only December, so I'm smashing it out.
Oh, wow. Okay. So fantastic result. And then tell me, because you also had a unit, I believe, was it, in Burleigh?
Yep. That was back with my my lovely first wife.
Oh.
She's long gone now. She's we bought it for 100. What was it? 78,000 fully furnished in the Aussie resort on the highway. So the beach side of the highway, but on the highway. But a little one better. You'd literally go out the door and 100 meters to the beach. So world famous Burleigh Beach.
Yep.
Can't go wrong. And I knew that. I knew it was always going to be, a winner. I was just comparing it to Bondi, and
makes sense.
But yeah, a year or two later, divorced and sold it for 110, and it took all of 5 minutes to sell it. And I knew straight away that was a mistake. But anyway, now they're 300-400 odd. But yeah.
Wow. Yeah. It's the magic of holding property. Like if you can hold it, and it's in a good position to hold, it will always far outdo. Like all of the people I talk to I've coached people in property for 15 years now, and there are common themes that come up again and again and again. And one of them is definitely regret around selling good quality property. Yeah.
Like I had another two as well. There was one in Chevron Island, which we bought for, I think it was like 140. We sold it for 240. That one I went halves with Dad on. Yeah. But that's like now 450, and it's been renovated. It's 450, getting 500-600 a week. And another one in Sunset Boulevard, which I don't know the value of that now, but we bought that for 272 and sold it for about 290. It wasn't a very good one, but now it's probably, I don't know, it's probably 5-6, but who knows.
Yeah, it's funny, our definition of isn't good, because often we have these expectations around property too, that it's going to do something in quite a short period of time. And and I'll give the Brisbane market as an example. A lot of people have been frustrated with the Brisbane market because it took a good 10 years to suddenly do its part of the cycle. But sometimes that's just property. And I mean, you and I are of a similar age, I'll say. You're younger than me. I've got 5 years on you. I'm 53.
Oh, you look younger than me. Try working in mine.
No, it's just the good lighting that Jason buys. Makes us look all glossy. But I'm always paranoid. I'll see people in the flesh and they'll go, you don't look anything like you look on Zoom. It'll be all wrinkles and bags.
You should see me coming off a night shift.
I can imagine. Yeah, fair point. Now I've forgotten where I was going with that one.
Sorry.
No, it's me. I was trying to be funny, and then I've lost my train of thought. But I think it was around. What was it around? What was I just saying? Something around.
Talking about regrets.
Yeah. Can't remember. We'll move on.
That's
I'm sure it'll come back.
Someone will find that funny.
I'm sure it'll come back to me. It teaches me, like Marcus, who's in charge of all our content, he's always like, make your notes. And I do. Yeah. I'm a prolific note taker, but clearly I forgot that one. So if we come back to your properties, there's been, once again, some clear lessons. Don't procrastinate. Because
that's the big one.
Yeah, that's the biggest one that you really want to make people
don't be scared of debt. I was terrified of it, but it held me back no end. So, use it.
You can't save yourself wealthy. No,
you can't.
No. And tell me a bit about the conversation you had with somebody on one of the Facebook groups just recently, because I thought this was really important.
Yeah, it was just last night. It was off I think it was a Financial Review article, and they were talking about interest rate rises, blah, 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 the end of the world, the usual. And there was a young bloke there going, oh, I've got a unit in Alex Headlands. And I'm like, should I sell it? And I'm like, dude, no way, keep it. They're not making any more of that, you know?
No.
And he sent me a DM, and we started chatting, and I, you know, I had to say at one point, hey man, I'm not a coach, I'm not a financial advisor. This is not financial advice. This is, you know, friendly opinion.
Yeah.
But I basically said, mate, how much did you buy it for? What do you think you can get it for now? And he said he bought it for like $240 or something, and it's now worth $575. And I said, mate, it's costing you next to nothing to keep it. He was getting $460 a week rent for it. I said, you can probably put that up. Just keep it. Like, why are you selling? And he says, oh, I just don't want to be in debt, and the real estate, they're hassling me. And I said, mate, only one person makes money out of selling. What do you reckon their motivation is? Like, they're going to make 15, 20 grand out of you, and then you're going to have nothing. So you're going to have to buy back in, then you got the cost of that, stamp duty, la-di-da-di-da. It all adds up.
Capital gains, blah, blah.
But yeah, it was just a friendly chat, and I think I've convinced him to keep it now. But he had another property in Bowen, which he lived in. I said, mate, that's the one you want to pay off.
Yeah.
It's never gonna go up like Sunny Coast. Well, it might. It is a beautiful spot. You never know. Eventually, but it's a long way away.
Yeah, it doesn't have the infrastructure that Sunny Coast.
Yeah, but that was where he's working and living. And I said, mate, smash that debt out. That's the one you should be, not scared of, but getting rid of. I had to say, I'm not an advisor. I thought people are getting sued now for.
No, as long as you've stated it quite clearly, I'm sure you're pretty safe.
Anyway, I think I helped him out. I said, thank me when it's worth $1 million. We'll have a beer.
And so tell me, is there anything outside of the education and the don't procrastinate, don't sell when you don't need to, any other life lessons? So for somebody that's starting out on the journey, they're nervous about it, they're worried about making mistakes, they might be worried about debt, like you said. They may not have a community around them. A lot of people that I talk to feel like they can't talk to their family about what they're doing or wanting to do, or their friends, poo-poo their ideas.
Yeah.
What would you say to someone just starting out that's really nervous about it, but wants some financial choices? Because that's largely what this is about in the long term, right? Is having financial choices.
Yeah, and that's where I've been myself. Like, I can't talk to my friends and family about it at all.
Okay.
I've actually lost friends over it. Like, they'll literally argue with me against what I've been educated on. And I said, I'll say to them, how many hours a week do you watch podcasts and educate yourself? 0. But they've got an opinion on everything, and
dangerous.
well they say, like, everyone's got one. I won't even go there. But anyway, the key is, don't be scared. In the future, there's going to be more people, and they're going to want to live somewhere. And we've got our business plan for Australia is immigration. So here they come, and they're coming with skills and money, and we've already got a rental shortage. So you're not going to have trouble renting it out. So the only thing really is possible interest rate rises. Well, that's going to happen anyway, up and down.
Yeah.
You've got to, for me, it took a long time, but you got to get your head around knowing that you're using someone else's money at, say, 2 or 3%, and you can get maybe 5 or 6% back. So you're making a profit. It's like a business, plus your tax deductions and so forth. And hopefully a bit of capital growth along the way. I've definitely seen it. Not always taken advantage of it. Certainly not to the best of my ability. But that's time in the market. Get in and stay in.
It is time in the market.
These gurus on here, they tell you all the time what to do. Just listen to them.
I think sometimes Sam just about loses his mind. He says the thing that stuffs most property investors up is not the property. It's people, because
Yeah.
we get inside our own heads and we start, churning stuff over. I've been guilty of it. I'm sure 90% of investors can put their hands up and say they've made a decision based on fear, uncertainty, boredom is a massive one. People just get bored. The amount of clients, and I'm so grateful that they come and sit in front of us, that come to me and go, oh, what should I do with this property? It hasn't done anything in the last couple of years. And I'm like, have you got the rents up? Have you, like what's the...
Hang on to it. Don't get rid of it.
Should I sell it?
What do they say? 6 years you've got to wait before you get some movement on average. Has it been 6 years? No. Wait 10. Wait 15. Whatever it takes, you a job. Just do it. But anyway, I know what you're saying. Like one of mine, I sold for divorce, and I didn't buy two more because of that. One was Kira and one was Jugan. Kicking myself. There's an easy million or two.
It does hurt when you look back sometimes, doesn't it?
Yeah. And I'm tired of working. I'm 48. I'm in the mines. I don't want to do it for much longer. Bouncing around and getting bombed with 300-ton rocks.
Wow.
I've had enough. So, this is my exit strategy, and I know it's going to work. Absolutely. And just getting back to that advice, it's just get in there and do it now and trust yourself.
Stay the
worst you can do is go bankrupt. And that's not going to happen if you buy smart,
No. So there's some key rules around that stuff, right? You buy well, you do your numbers, you expect to wait 10 to 15 years in the market. When you get the chance, you can start paying down debt. Once you're out of your acquisitions phase, we just chip away at the debt nicely. Use your tax deductions to your advantage. And if you've got buffers in place as well, then you can weather the bumps and the scrapes, because all the big black swan events, the COVIDs, the GFCs, all of those things, they usually, if you're in sound areas, and regional, as you know, can take a hit and not recover as fast. But the main economic centers, they go up and then they might go down in a big event like that, and then they bounce and rebound back up again. Usually statistics show us in a 2-year time frame, which is awesome. So it's not
long, eh?
It's not. So it's not that we have to worry about. That's the stuff that keeps people awake at night, but it's not that we have to worry about. It's we can't mess with it and try the flipping, the selling, the worrying. And I think this is where, if you don't mind me saying, positive can help, and where clients do see it through the long haul, because you can sense check it. You can go, Tab, what am I going to do with this property? Like it's sat quiet and it hasn't done anything. And it's like, okay, well, do you need to sell it? We go through all the bits and pieces. No. And you were talking about rents going up. You're familiar with SQM research and checking the vacancy rates?
I never do it, but I've got faith like you wouldn't believe in you guys. But I reckon Sam's got a crystal ball, but I know they mention pretty much everything he says seems to just happen. It's like magic. But anyway,
he's pretty good, Sammy.
And his take on future and what's going to be good. It's just like, wow, how does he come up with that? But anyway. I know what you're saying. Do the research, and you can, a lot of people have got their graphs. I've heard other people on your podcast talking about they're watching their spreadsheets, and I don't do any of that crap. I trust in what I'm doing, and I just do it. But I'm not built that way. So I know if I buy right and I hold it, and if I have any doubts, talk to my talk to my coach. Talk to the couch, you're not going to get much there. Talk to your coach, surround yourself with good people, and reinforce your beliefs, I guess.
Fantastic.
And just do it.
And so my last question for you, and you might feel like you're repeating yourself, but like you and I were saying, sometimes repetition's not a bad thing. So my last question for you, sir, is if you could go back in time and meet young Geoff, so he was 20 years old and he was wanting to retire at 30, what would your advice for Geoff be today? What would you say to Geoff?
I think I'd grab him by the throat, smack him around a bit and say, don't listen to anyone. Do what you said you were going to do. Believe in yourself.
Believe in yourself.
Yeah. Don't be scared of borrowing.
Yeah.
Don't listen to the negative naysayers, the ones that aren't there to help you.
So true.
Surround yourself with people that are there to help you.
Yeah.
Even if they say no the first time. Persist, as I did.
Yep.
So just get out there and do it.
Yeah. Oh, well, fantastic advice. There's a saying that I love, that I use a lot in my life, whether it's investing, my running goals, because I'm a mad runner, as some people know, and other bits and pieces, is the results that you want are in the work that you're avoiding.
That's right.
I always think of that when I get frustrated. I'm like, what? This isn't working. I'm not getting the result, and I always know what I'm not doing. It's you always know in your heart of hearts, and sometimes we allow other people to take us off track because it's more comfortable, it's easier, and it's sometimes not as stressful. But investing, as it's about building that muscle. It's like going to the gym and building the muscle around learning to overcome some of those fears, and it builds confidence as you go. I mean, Geoff, it's like when you look back at what you would have been comfortable with at 20 versus what you're comfortable managing today, it's it's worlds apart, right?
Yeah, that's right.
You just build it by doing it.
I know I've got winners behind me. Megan, she's got the whip out. Get it done. Save.
Megan.
And now this year she's holding me back. She's saying, wait until this one settles, wait until that happens. And I'm like, no, I want to go again. Now she's actually doing the right thing and probably just slowing me down a little bit. But anyway.
Yeah. She'll be slowing you down for a reason.
Oh, there's a reason. Yeah.
Absolutely. Yeah.
Just let one settle, let the banks get their head around it and whatever.
Yeah, we don't want a panic on the other end.
Yeah, that's right. But awesome. Surround yourself with legends. You can't go wrong.
Yes, well, ditto. We surround ourselves with legends like yourself. You've done an amazing job, and thank you so much for being part of today's podcast. I think pleasure. A lot of people will get a lot out of your straight talking style. It's been an absolute pleasure to interview you today. So thanks so much, Geoff, for coming on board.
No worries. Thanks very much, Tabitha. It was a pleasure, mate.
Cheers. Hey, thanks for listening to Property Investor Tales. Remember to subscribe so you get notified every time a new episode drops. As you can guess, I love hearing people's property investor tales. So if you'd like to share yours, then please get in touch with me via email at propertyinvestortales@positivementor.com.au. We would also love your feedback, and I would appreciate a 5-star review over on Apple Podcasts or Spotify. Remember, you can watch all of these podcasts over on YouTube at Positive Mentor or at positivementor.com.au. Until then, take care, happy investing, and bye for now.